to Talking Point today. I'm your host, Nirav, and the talking point today, of course, are the talking points today are what is it within the arsenal of the finance ministry that the finance minister can put forth in this budget, and what will be judiciously used, and what could be the stuff that will impact the equity markets, the sentiment, and the actual math. With me is Nirav Sheth of Emkay. Needs no introduction. Nirav, great having you. Thanks so much for joining in. Hope all is safe.
Thank you. Yeah, all safe and fine. Thank you.
So Nirav, what's the big picture after the 2019 budget, wherein there was a bit of a tinkering with the FPI tax and then rolled back? The FM hasn't quite put a foot wrong in the corporate taxation, in the budget presented last time around and more. And this time around, she's got some revenue to play around with. What's your sense of what the big budget math would be?
Well, let's get out of the small nitty-gritties in terms of what the budget will try and address. I think the key thing to look forward in the budget is that whether you can have a fiscal policy and a monetary policy which is independent of what US is doing. So US GDP is firing in a different direction, right? Which is what the bond yields are probably reflecting. It is just preempting higher real growth rate in the US economy. The question is that you don't have your economy is doing well, but it's still a K-shaped recovery. All know that, we have a lot of problems in the rural market. There are some bit of problems in the consumption. The question is that, do I have the space to address what are Indian specific problems? I think that is a bigger picture. So if you stick to a path of what I would call fiscal consolidation without getting too worried what happens in the current year, but a glide path in terms of what happens in the next 3 or 4 years, I think it will budget well done.
Well, I think they will enable us to do that, right? Because they've given an FY26 target. So from 6.8, it will obviously come down to at some level between 6.2 to 5.8. So that is a given, you would say?
It's a given, but the question is that, again, the details matter. The question is that, are you consolidating when my economic growth is 12 or 13%, or am I consolidating because my economic growth is 9 or 10%? In first case, it is a virtuous cycle. In the second case, it's a vicious cycle. That is what I think is more important.
Okay. So you'll have your eyes out for that. You'll be happy with a number around 6?
And I think we're projecting a deficit about 6.2%. So I don't think that it is 10, 20 bips that matters.
Okay,
I think what matters is the narrative.
The narrative.
Right? That
okay.
I am, till the time my private capital is not going to come up, I'm going to stand in terms of the spending. I think that is a message that needs to get out.
Actually, that was going to be my question, Nirav. That irrespective of whether the number is a 6.25, 6 or 5.8, because everybody's estimates are different.
Right.
Would you be happy even if the number is on a slightly higher side, but it shows a pullback from the 6.8 numbers, and the money is being spent for what almost everybody is hoping for, which is private, which is capex? Would that be, on a basic premise, a budget well delivered?
Absolutely. I think that is the way this government has worked, and I don't think that narrative is going to change. Yes, so you want spending to happen on the capital expenditure side, but I'm also conscious of the fact that you're getting into a very, very politically charged environment over the next 3 or 4 months, and I think that you will see some rollouts as well, and I'm fairly okay with that, which is fine.
You think the markets will take it in the stride?
I think they'll take it in the stride.
Over the top.
Exactly.
Okay. The room for the dolouts, considering that there is some bit of private or capex element that the government will have to announce, the room for such dolouts, at what percentage or at what numbers would you be comfortable with these?
Well, I've not done the math to try and give a specific number, but I would like to believe that if you again look at the balance sheet of the government, we are income poor, but we are asset rich, right? So there are a lot of things you can do on the asset side to try and ensure that you create the right kind of revenue metrics that you want, even for the dolouts. So I think the question is that you've seen Air India, you've seen yesterday, I forget the name, the steel company that has been again taken by Tata.
Neelachal.
And yes, Neelachal. So I think that if you can try and speed that up, then I think got enough arsenal. And like I said, you are only looking at the next probably 12 or 18 months. The growth rate will take care of everything else, right? So you're just about there. You just don't want to breaks at the. I think that basically has to be my takeaway from the budget.
Okay. What about sentiment? So one is what the government actually does, and you kind of enumerated the larger points. What about sentiment? A few days ago, I've learned to ignore pre-budget assumptions, especially those come on WhatsApp, but the fears around any kind of tinkering with taxation on the wrong side. And of course, there was a journalist who put out this piece yesterday that maybe there could be something that around for the FPIs, considering the kind of flows that we've seen? I mean, $15 billion leading up to the budget 4 months is a pretty stark number. What's your view on both of these?
So, in terms of taxation, I don't think there is much left to tinker, in a sense that, you can argue that, people right at the higher end of the tax bracket at about 42%, you are working half the time for the government, right? So it's a scope, and you got all these kind of surcharges. I'm not sure they'll pull the plug here. I think the economic survey also mentions about the fact that, you could probably have some tinkering on the wealth tax side. Uh, People in the markets will not likely. It is probably a step in the good direction, but we have to appreciate the fact that capital is fungible. People are fungible in this market, right? So you always lose. Probably people can move out of the country and take up residency somewhere else. So it's a very fine line that we have to draw. But yes, there could be some source. So I would like to believe that at some point of time before 2024 elections, I think you will have some movement towards the wealth tax. If you keep it very marginal, then I think that it can add to the kitty. Your second question was about
FPIs, and can something be done there? Would taxation changes be the way to get them back, or you don't think the government will look at that?
No, I don't think. I don't think that this government will try and give out extra doles to try and ensure that you're trying to return the foreign money. You're trying to create a platform which enables that. Okay, it is profitable to invest in Indian companies, and that should be the source of pulling the money in, rather than trying to dole them up with some kind of taxation and all. I don't think that you will see any too much of tinkering on the taxation side, especially because of the fact that you got LIC IPO coming, which is big thing. So I'm sure that they are conscious of that.
Okay. Beyond budget, Nirav, the first quarter has been saddled with a bunch of events: budget, a choppy earning season, if you will, the elections, and oil bordering on 100. What worries you the most?
So oil is certainly a cause of worry, and more importantly, what is leading to a rise in oil prices? One thing is obviously the fact that you've got the oil demand coming back to pre-pandemic levels, right? And also I suspect that the private oil producing companies are not necessarily responding to the profits because of the ESG initiatives and all that. But I think the bigger tension, and something that almost worries me, is what is happening with Russia and Ukraine, right? And it has gone too far. We just hope that it doesn't culminate into some sort of a war, because then you've got sanctions on Russia, and Russia is commodity heavy, right? So you don't know how it's going to play out. But I believe there is a significant amount of this premium which is sitting on the oil price. It is a worry right now. So far, we've been lucky because the software exports have been significantly higher than your estimates, and that sort of covers up when I look at the total current account balance, right? The heat is not so much. But in stock market, it only matters when it matters. And that could happen at $100, it could happen at $95, we don't know. But yes, it's a big risk.
So, are you constructive, assuming the budget ceteris paribus, or there is no big gyration in the budget, right? The other things are a bit unpredictable, so to say, at the current moment. Are you constructive, or would you wait for a month, yet UP elections go by, let the Russia-Ukraine issue settle, and maybe then take a call?
I think the markets are, Niraj, very, very forward-looking, right? There is no way you can try and preempt and say that I'm smart enough. Then those but a lot of people around and say that I can try and time my market and buy something right at the bottom of the market. That's not going to happen. What you know is that over a period of time, which is over 6 months or 8 months, I have probably not seen so many things falling in place for the Indian economy, right? We are talking in terms of the profit growth. The profit growth has been highest in the last 2 years, right? That usually preempts a very, very strong capex cycle. You've got investment cycle, which is doing reasonably well. The real estate cycle, which was down in the dumps for about 6 or 7 years, that has a big multiplier effect on the economy. Right? If you look at the broader markets, they are doing well, right? Which tells you broadly, again, they reflect the state of the business cycle in the economy. So I'm very, very constructive on the economy. Now, having said that, it means that you have to put this in the context of the valuations. So I believe that you are into a year where earnings growth could be 15 to 20%, the commodity prices behave, which means that you can expect some sort of derating in the market, and market could be up by about 10%, 12%, something thereabouts. On a 3-year perspective, I don't know any other asset class that you should be invested in.
Okay, but so if the markets don't really deviate too much, and therefore you are circa 10-12%, circa 19,000 for the Nifty,
Sure.
let's put it
Yeah.
that way, would you be constructive on specific pockets, therefore, which might show earnings growth and where valuations are a bit more reasonable?
Absolutely. So I think one thing which is very clearly visible right now is that there is a big shift that seems to be happening away from what is now known as buy at any price and growth companies into some sort of value picking and stuff like that. So I think that trend will continue, and I think I don't even call it an investment ideology. It is just that you had very few companies garnering a large part of the profit share, right? And that now that growth is getting more dispersed. Let's take an example. So you've got, let's say, for example, ICICI, Axis Bank, and SBI Bank. If you now look at the next 3 years, their ROEs, their growth rates are likely going to converge with what an Kotak does and HDFC does. Markets eventually stock price will mirror that, right? Which is probably happening for a large number of companies, right? So the earnings are coming up. To answer your question, one thing that really stands out is consumer discretionary, right? Especially on automobile side. So you had 5 years of topsy-turvy volumes with annual volumes not going anywhere. I think outside banks, something that appeals to me very, very strongly is something like a Maruti, right? So you will have double-digit growth rate for a long, long time. So a lot of things went wrong for the sector, and a lot of things are sort of reverting to me.
Yeah, I remember our last conversation wherein you said, okay, just because Maruti is not talking about EV doesn't mean that they don't understand.
Absolutely.
EV. So I remember that piece. A couple of other points, Nirav, before we wrap this conversation. One is, so you were amongst, when you were with Edelweiss, you were amongst the earlier team which identified SpecChem. We've spoken about this in the past. There are murmurs of how some of the other export-oriented themes, which might be small right now, which may have been present, textiles, for example, have been present for the longest time, but are still small.
Sure.
But in the new China Plus One narrative, could actually be forces to reckon with 5 years, 10 years out. It's too long a time frame. I don't think even CEOs are seeing that out, but some market men are. My question to you is, do you foresee a scenario wherein an Indian theme in a China Plus One world could be, if not as strong, then a much stronger theme and a much good theme to bet on from a 5-year or a longer perspective, export oriented?
So, Neeraj, a very good question. And I like to believe that a lot of surprises are going to come from so-called uninvestable sectors.
Precisely.
Right? And the reason is that these companies have been capital starved. Right? So even today, for example, it is challenge if you want to raise, let's say, equity capital for some of the textile companies. I'm just taking the top 2 or 3 out, and it's a big sector, right? Which means that at the end of the day, you are constrained by your internal accruals and the piddly amount of debt you can raise, right? That itself prolongs the cycle, right? So everyone is saying what is happening. People are trying to move out of China, and this is not only textiles. So yes, till the time you don't have big surge of capex coming, I think the cycle is going to last. And I don't want to get into micro details, but some of the sectors that we have looked at, and I believe that exports, manufacturing exports, are a theme to watch for the next several years.
Okay, so we don't want to get into names, but I'm just trying to think: is textiles a part of their manufacturing exports, or are there others which are looking more competitive, more productive, more
I think
worthy
that
to bet on?
auto ancillaries, for example, that's a big setup of the manufacturing thing that you've got. Now, hopefully, we have big capital coming into semiconductors, electronic supply chains. The chemical companies, a lot of them are specializing in some particular chemistries. So I think that space is opening up quite a bit.
Okay, one last question, Nirav. The last 12 months have been, if Shark Tank India shows something, it's the coming of age of entrepreneurship and some fairly cool, very new sectors. We've had the biggies betting on green hydrogen, then a different set of people betting on EVs. So a lot of new things coming to the fore. Have you guys done some work? Have you been, kind of trying to be first of the block into any of these themes? And are there things that you identified which could potentially benefit because of the new themes that are emerging?
So obviously, you can't deny the fact that all these new unicorns that I got listed will have a significant impact on the economy. The question is that what happens to me as an investor?
Precisely.
I think so. First of all, the valuations are in a different zone. So I think there's a big disconnect between the private equity market valuations and the public market equity valuations. Second, I think that investors in general seem to have taken a call that, I expect a duopoly, I expect an oligopoly over the next 5-10 years, and therefore I'm going to buy the stock. Life is not that easy, right? So I think that we don't appreciate that India again is sort of a K-shaped market. You got big consumption power in the urban markets, and it drops significantly when you come to the rural markets, which means that in an extended period of slowdown that you should expect, which means that we'll probably go wrong in the pace of adoption in terms of, I was just looking at Tesla. I think it probably got listed in 2003. 95% of the market cap has been created from 2019, right? So you'll see a serious long chart which is almost flat, right? So it takes time when you want to create these kind of new companies, and who the hell knows what happens in 10-15 years.
That's
It's not very easy. I
That's
mean, just go back to 2010. You did not have an Aadhaar, you did not have Reliance Jio, you did not have any of these fintechs. So to assume that, I can think that, this company will make $1 billion in 2035, to me, yeah, so it's sort of tossing a coin.
Okay, fair call. And thanks for the candor. I really appreciate. And great having you today. And all
Same
the best
here.
for the budget.
Thank you so much. All the best to you.
Thank you, viewers. Thanks for tuning in.
Thank you.